Welcome back to the daily life of a day trader. Today I'm going to show you a very simple but systematic way of identifying opportunity in the market as a day trader. So without wasting much time, let's dive into it and I'll show you exactly how to do it. It is very simple. I want you to stick to the end of this video. Definitely you are going to learn something new. Meanwhile, if this is your first time of seeing my channel, please like and subscribe to this channel to see more of these kind of videos. So let's get into it and I'll show you how it is. So today is Monday and this is my expectation and the trade that I'm going to take this particular week. If you look at this top corner, you can see that this is a chart of USD CHF and this is daily time frame. And from this daily time frame, I have confirmed that the direction of the market is an uptrend. And then looking at this particular point that the market is currently trading at, you can see that this particular bearish candle that happened on Friday touched into this particular order block created here before this movement. So that is my first confirmation. The market has returned to this particular order block and also trading on a trend line. Then going down to 4 hours time frame. So this is how it looks like in 4 hours time frame. From 4 hours time frame, you can see that this liquidity created here was taken out by that candle that dropped into that order block. And if you look at that candle that dropped into that order block, you can see these rejections that happened here. This wick that were created in these bearish candles is a form of rejection that's showing that the market wants to change direction. So let's go down to hourly time frame and see what we have there and how we'll be looking for opportunity to trade this particular week. My weekly bias is a bullish candle, and because of that, all positions that I will be taking this week is bullish positions. So going down to hourly time frame, this is how 1 hour time frame looks like. So from this 1 hour time frame, you can see that this particular point, you can see that a fair value gap was created here before this break of structure. You will see this break of structure more obviously in 15 minutes time frame, which is where we are going to determine how we will take the trade. And also looking at this opening of this particular candle, like opening of the market on today being Monday, you can see that there is an imbalance that is created here. So I'm also expecting the market, if it didn't respect this particular fair value gap, then I'm expecting the market to come into this particular imbalance, this volume imbalance that was created here, and also this particular order block, and then I will enter the trade. This is my true expectation, but I value this particular fair value gap more than this particular one. But however it happens, this is my expectation. So let's go down to 15 minutes time frame, which is the time that we are going to take the trade. So this is how it looks like in 15 minutes time frame. Let me just make it this way and expand it a little bit. It will be easier to see. So from 15 minutes time frame, you can see the break of structure that happened, and then this is the fair value gap that was created very close to the break of structure. But if this particular fair value gap is not respected, as I told you earlier, then my next expectation is that particular volume imbalance that happened in hourly time frame. So my determination or my confirmation that this fair value gap will be valued depends on the hour, okay? Depends on the time when the market returned into this fair value gap. Okay, I'm expecting that to happen in New York session today or probably before then. So if the market returns here before that particular time in New York session, then I'm expecting it to definitely return into this particular volume imbalance that occurred in hourly time frame. But if it returns here in the New York session, the time that I'm expecting it to come here in the New York session, which is between 7 a.m. to maybe 10 a.m. in New York session or 10:30, then I'm going to take the trade buying position at this point. But today is Monday. Let's see how it goes. And so this is currently how the market is going. So as I told you earlier today, that I'm expecting the market to trade into this particular fair value gap, and then I would enter the trade. So from what I just showed you, how the market is moving, you can see that I entered the trade exactly at this particular position, and currently this is how it is trading. So the market didn't come into that volume imbalance that was created in 1 hour time frame. It just returned here and then continue moving upwards. So this is how we trade, guys. Once you know your weekly bias, then you will know how you will be placing your trade. So I'll be going more bullish this particular week. Like tomorrow, I'll be looking for a bullish opportunity because my weekly bias for this particular chart or for this particular instrument, USD CHF, is bullish movement. I'm expecting a bullish candle for a weekly time frame. So guys, that is it. If you found this video useful, please don't forget to leave a like on the like button and also subscribe to the channel. Also, over here are other live videos of trades that we took, because I'm a day trader and we drop videos all the time about our daily trades. So over there you will learn more about trading.